So I've been trading the stock market for about 30 years, a little more. And in that time, I've looked at tens of thousands of charts. I started out drawing charts by hand. Of course, we don't need to do that anymore. But what I've learned from all of that time in front of a screen is that there are certain cycles in a stock market's performance that repeat over and over and over again. And if you understand what those are, you can predict the next wave in a stock's move. And so this video, I'm going to explain exactly how that cycle plays out. All right, so if you look at hot stocks that have done really well in the past, or periods in the market when you've had really strong bull markets, you look at enough of them, you'll see that there's this cycle that repeats over and over again. And so what I want to do first is draw that out for you, and then I'm going to show you some examples of stocks that have done really well, whether they're day trades or whether they're very long-term trades. I'm going to show you how this cycle just repeats itself over and over again. And the obvious conclusion from that is that you will be able to predict what stocks are worth buying and when. So let's draw that cycle out first. Now, typically, a market, is moving down, stocks out of favor. And the first step is the downward trend line is broken. So I could draw a little downward trend line, and we have a break of the downward trend line right there. Now the next phase, because markets very rarely go in V bottoms, what you typically then see is a sideways range that builds. And the sideways range has essentially formed a rising bottom. So this low here is lower than this low. And what that means is that the buyers have taken control of the market. When the market's moving down like this, the sellers are in control because we have falling tops. When the buyers take control, now we've got rising bottoms. Now the next phase is when investors get excited about the company for some reason. Maybe there's some fundamental event, some rumor, some news that gets the buyers excited. And when that happens, you'll get a breakout from that optimistic rising bottom. So that is your first potential buy signal. I like to buy those first breaks from rising bottoms. I have day trading strategies, swing trading, position trading strategies that all look for that first step. And then what happens is the market will move up quickly for a little bit, but what ultimately happens is the people that own the stock from back here, they don't know necessarily the reason why the stock broke higher there. And so they sell into that strength, because if you're one of these people who've been losing money for months, you just want to get out of the trade. That's natural human instinct. Like, I bought the stock at $5. It's been at 3 and 2 and 4. I've been losing money for months. And then when it gets back to what you paid for it, you're like, oh, thank you. Let me get out of this dog and move on. They may not know about the rumors. They may not know about the improving fundamentals, because oftentimes that's not fully public information yet. So they sell into that strength, and that's what causes the first pullback in the upward trend. And then there's usually a little break from that. And that is the second confirming signal that the buyers are taking back control. All right, and if I'm day trading, I have a strategy called a hit and run strategy. If I'm longer term trading, I call that the second signal after the initial breakout. Most stocks, when they first break out like this, they will pull back. 60-70% of the time, they'll make a little pullback after that first break. And that's usually because those people that own the stock at higher prices, they sell into the strength, and it pulls back the market. But remember, there's some new information, there's some fundamental change underway that makes people excited to buy. Now, maybe not everyone knows about it yet. There's a small group of people that follow that company the closest. They know there's something good going on. And so when there's that little pullback, they consider that an opportunity to either buy more or to take their initial position. Hey, I want to let you know about some free upcoming webinars that I am doing. If you want to dive a little deeper into how I day trade the market or longer term invest in the market, then make sure you sign up for any of these free webinars, and you will receive a free copy of my book, The Mindless Investor, electronically. We will email that to everyone that attends. To register, pretty simple. Go to stockscores.com, go to Trader Training, upcoming events, and there you can see all of the titles, the dates, all the details to register. Again, it's all free. Why not? It's an hour of your life, and I'm sure you'll learn something quite important. And so at point number 2, you've got another strategy entry point. All right, so then that usually leads to more of an upward trend. And then again, you get that inevitable profit taking, but usually the second round of profit taking is a little more substantial because now you've got a wider group of people that own that stock at higher prices that are going to sell into that strength. And so what it causes then is a more substantial pullback. And then again, you get ultimately a break of that pullback, which is your third chance to buy the stock. If I'm day trading, that's my intraday pullback play. If I'm swing trading, that's I simply call it a pullback play. It's not usually a position trading strategy because you should already be in it as a position trade, but it's an opportunity to get in for more. All right. So then the stock will often go up some more, and then it goes through a period of consolidation. Now, when I say consolidation, what I mean is the stock is trading sideways. It's building a new foundation. The market's priced in some new fundamental information. The valuation is higher. Investors are feeling optimistic. It's a very different mindset than when the stock was in a downward trend. But it's also gone up a lot. And so you need to cleanse out the profit takers. The stock needs to take a little break and it goes sideways for a while and it builds a new foundation. So what we look for then is to make sure that the bottoms are rising in that consolidation and there's a horizontal line of resistance. And we usually see a pattern like an ascending triangle pattern. We then watch for the breakout from that, which is chance number 4 to buy the stock. And so if I'm day trading, that's my superhero strategy. If I'm position trading, that would be the Stockscores simple strategy. It's a breakout from a pattern that's lasted about 60 candles. So if it's a daily chart, that means 2 or 3 months. If it's a 1-minute chart, that means it's an hour. And it doesn't matter what chart you look at. I'm going to show you examples in a minute. These things come up over and over again. Whether you're day trading looking at a 1-minute chart or a 2-minute chart, or a swing trader looking at a 13-minute chart, a position trader looking at a daily or even a weekly chart, these patterns occur everywhere and they happen over and over again. Now, they're not always as perfect as I've drawn them. I'm going to show you some examples in a moment, but you're going to see, if you look for this, you'll see it happen quite often. All right, so that's stage number 4. And then the last stage in the upward trend is when the trend goes parabolic. It starts to really run up quickly because the crowd rushes to the stock. It's the FOMO trade, the fear of missing out trade. You've had people watching this stock go up and up and up and up, and they're hearing about it in the media. Blah, blah, blah company is up 112% in the last 9 months, and they rush in at the end. People that don't know anything about trading typically, they rush in and they pay too much. And so the result then is you get the linear trend line, which I'm going to draw here, turning into a curve. It gets steeper and steeper, and that's usually the end of the upward trend. Ultimately, what then happens is you build a falling top and you break down and the party's over, and we're going to start back and do that process all over again. All right, so let's look at some examples of this now. Here is a chart of ASRT. No idea what they do, really don't care, but let's look at how this plays out. You had a downward trend here. You broke the downward trend line. That was the first step in the reversal. Then you built the rising bottom. Then you broke from the rising bottom. That's entry opportunity number 1. Then you had your first little pullback because these people are selling into that strength, and you have opportunity number 2 when that pullback is broken. Then you have a more substantial pullback, and you have point number 3 when you get a break of that more substantial pullback. And now what you see with this stock is it's starting to go parabolic because the stock is running away from the trend line. And just at the end of the week, this past week, that stock had a sharp downward day, which means it's probably now going to pull back to that linear upward trend line. Now, it's possible that we'll pull back for a couple of days, make another break of a pullback and go even steeper. That could happen. But the opportunity to buy has passed. You do not want to be chasing a parabolic trend. You want to buy at 0.1, 0.2, 0.3, but not up here when the stock is parabolic. All right, let's look at another example. I'm going to punch in INOD. And here you see the same thing repeating itself. Stock's in a downward trend, breaks the downward trend. Here it goes sideways for a long time, and it can often do that. It can go sideways for months. But notice in January, it started to build rising bottoms. That's optimism. So you've got optimism instead of pessimism. And then you break from optimism through resistance. That's your first move. Then you get a nice sharp move, a little pullback, and that's your second move. And now we're starting the third pullback. So this should come back a ways and then hopefully break and continue the upward trend. So this is another stock that's running that same cycle. It's only played out a couple of the phases. Now, what if you're a swing trader? Maybe you like to hold stocks for just a few days. Same cycle again. Let's take a look at a 15-day, 13-minute chart. Here's a stock that was trending lower, broke the downward trend, built a rising bottom, made the break. That's step one. Little pullback, that's step two. More substantial pullback, that's step three. Linear trend line, stock goes parabolic and then breaks the linear trend line. That to me is the sell signal. Doesn't mean we can't buy it back later. It could start all over again. It could go sideways here for a while, break out from a rising bottom, and it would be back at stage one, and so on and so forth. What if you're a day trader? Well, we've got examples of that too. Here's one from Friday. Friday was a very weak day in the market, but there was still a stock that was able to do well, even though the market was lousy. It's been lousy all week. You can still make money on the buy side if you know what to look for. Here's sideways trading, break, step one. Little pullback or even a rising bottom break, that's maybe step one better. And then you get your first little pause right here. Call that step two. More substantial pullback, step three. Trend line broken from a falling top. That's often how stocks top out. And there, the party's over. Time to move on. So this occurs over and over again. And all of my trading strategies, whether I'm day trading, swing trading, position trading, they're all some variation of this. Now you need good tools to find them. You need to know how to look. But if you just keep it simple like this, you don't need all the indicators that people put on their charts like MACD and RSI, because it really comes down to patterns. Those indicators are just representations of this cycle that I've talked about. If you understand this, you can do really well in the market. Hope you've enjoyed this video. If so, click on the like button, subscribe to the channel, and we'll see you at the next one.